Okay, so this is day two. I want to just to recap from the previous lesson, right? So what we have discussed on the day one, what are financial institutions, and then we discuss what are the credit functions of financial institution. We discuss about three size transformation, maturity transformation, and the risk transformation. And then we discuss what are the drivers of credit and what you mean by a quality loan. And then we discuss the credit business. In today's credit business, we discuss certain factors we need to take into account. And then we discuss the challenges we are facing in today's context. And then we discuss what are the three central questions faced by a credit manager. You know, what are the three central questions faced by the credit manager? I mean, basically, where our credit business is now and where you want to be. And then the third one, how to be there. These are the three central questions every credit manager are facing today. And then in order to find solution for these three central questions, so we discussed there are some information we need, market information, and also some competitive information. For that, we discussed who are the major players in the credit market. We discussed last time. We are having around 32 banks in Sri Lanka in 2019 December. But as far as today's concerned, we don't have 32 branches, right? So we are having only honestly the 30 branches, right? The two banks are not operating in Sri Lanka, but they're not cancel their license by the central bank. One is the two foreign banks like ICICI Bank and Axis banks are not operating, and then altogether we have around 30, and then we have finance companies. We had 42 plus four specialized leasing companies, but out of 42 now, last 22nd, the finance was license was cancelled, and then there are 39, or then 41. There are two financial institutions are not cancelled their license, but they are not operating. But other two are basically from basically are uh, the ETI Finance and Swarnamahal. So therefore, altogether 39, and then we have three registered uh, microfinance companies in Sri Lanka under Microfinance Act. There are so many 33 odd non-forming finance companies are there for microfinance companies, and then we have uh, cooperative societies and other people who are also offering credits. Those are the major players, and we discuss about their the deposit base and things like that last time. And then we discussed the threat came from the fintechs. So of course, Dialog also some sort of a fintech company. Right? What are the advantages and disadvantages of fintech for credit business? And then we discussed the power of suppliers and customers. And a lot of customers are now techno savvy. They are full of information and things like that. So we discuss all things the last week. Then we discuss about why assets are important. What is the total asset base in Sri Lanka as far as the financial sector is concerned, around 20.2 trillion. But come to the banks, point of view is around 14 trillion. So why assets are important? The banks are categorized basically based on assets, right? We discussed banks are categorized uh, large bank, middle bank, and the small banks, right, based on the assets. And then we discuss why loans and advances are important for financial institution, because if you want to improve your assets, the one factor need to be taken into account the loans and advances. Because why? The loans and advances are contributing to the asset base. So if you strategically want to improve your assets, okay, from small bank to the medium bank or medium bank to the large bank, so we have to look at your assets. So how can you improve your assets? by improving your loans and advances. By loan and advances are contributing to your asset base. And then we discuss what is the total credit market in Sri Lanka. In terms of value-wise, how much you think is around close to 9 trillion Sri Lankan market, and what is the market of pawning, what's the market of housing, right? Is around 300 billion, not much, right? So this is a total credit market in Sri Lanka. And then we discuss how economic factors impact my credit business. Now, as I told you last time, there are external factors may impact my credit business, right? So uh, basically we discuss about pre-COVID and post-COVID. Now pre-COVID, what I'm referring to the time frame of 2019, entire 2019 year up to 22 March, right? So that's the pre-COVID. So after COVID mean, so post-COVID mean from 2000 um, 20 March onwards, right? What's the impact, right? So we are going to discuss it later on. So under economic factors, what I have highlighted, what is the present economic situation, and credit as a percentage of GDP. So we discuss in Sri Lanka, our last year's credit growth is not enough. And also we discuss importance of private sector credit growth, how much of credit is given to private sector, right? We in detail we discuss what are the areas we have given loans during 2019, and when you are compared with other countries like uh, Vietnam and um, Thailand, what is the percentage of credit growth, right? Is almost double than us. Okay, so these are the things we discuss, and we also discuss how NPL related to the GDP growth, right? So there's a correlations between all these things. That is what we have discussed last time in more detail, right? So then, so if you look at it, the what are the things we need to study under my session? So we discuss about this introduction part and how competitive forces affect credit business with help of Michael Porter five forces analysis, but look at in a different angle. And then we discuss credit industry analysis, and then impact on pre-COVID-19 on economic factors to our credit business. And now the latter part of my sessions, we are going to discuss the how post-COVID-19 impact on my credit business, right? What are the government initiatives and government uh, directions given to banks, and because of that direction, so because of the prevailing condition, what happened to our credit business going to be in 2020 on March onwards, right? We will discuss all these things, my impact of COVID-19 for fiscal factors. We are going to discuss in greater length in 2000 in later part of my session, maybe most probably maybe next week or so. So there may be a positive side as well as a negative side. I'm going to look at it all things from credit business point of view, not any other areas, right? Okay, now we continue from where we have left last time. So we start the new area, impact of pre-COVID on social cultural factors. Now remember, there is some relationship between cultural factors, socio-cultural factors with credit business, right? That is why we need to understand how these factors contributing to the Sri Lankan credit business, right? Okay, let's look at it. What do you mean by a social factor is basically, it may be vary from country to country, right? But it is very important that that factors to be considered, right? Because the changes of these social trends can impact on the your demand, your credit demand for your credit products and services. So, what are the factors we look at it here? The demographic factors, lifestyle factors, social mobility, educational level, attitudes, things like that. How will impact my credit business? right? Okay, let's look at it from one. So this is the five generation in one place and in the market by 2020. These are our customers as well as our employees, right? Now, I don't think we have a silent generation. Here we are talking about the people who are born during a particular year. Now, say there are some people who are working in your organization, 46, 64, like that. It go from baby boomers to Gen Z, right? There are people who are working in organization, and there are some people uh, who are born to take some uh, those people like the market who want to take some loans. Now let's look at it. Some special characteristics of this. You know, each and I don't want to give you all the details, but each and every person having some scientifically proven. There's some specific attitude, so some specific requirement based on your age group, right? Now, why I'm telling all these things, now you look at it, the Sri Lankan population, right? There are more people from above 50, almost 25%. So they may look at it from a different credit products, maybe we pension products. We need to look at it that why we need to understand what is our credit, our uh, um, democratic composition, so age composition, and then we can think what sort of products, what sort of credit products we going to catering to them. Now, if you really look at it from 15 plus, the large portion is 16 plus, around 60% of our population. So we can consider we can look at it, education loans and housing loan and things like that. But you sometimes if you really look at it, some of the figures which was done before the COVID, right? There are trends in millennials in Asian countries. This is a McKinsey study, right? Now, you see the 49% of people just living, the young people are just living with the parents. So they are not look at it housing, and it is not a requirement now. So they said housing loan. So that is why sometimes in Sri Lankan housing loan market is around 300 billion, right? And there are more income spent on eating and shopping, and they want to move. Unfortunately, we have some problem with moving here and there, but a lot of people are spend more money for moving around. So we must concentrate on that areas. And if you really look at it, some of the figures in Sri Lanka about the housing loan, the condominiums are going up. You see, the condominium business in Sri Lanka, if you really look at it, in Sri Lankan population from 2017 till to 2030, so we are expecting around 24 million. So that's estimated, right? So there's a 1%, 1.1% growth in population. Now, if you look at it from this point, now there are maybe still we have a urbanization, fast urbanization, right? Now it's in from 2001 to 2014, we had around 18.5 urbanization. So that means people are uh, want to come to uh, Colombo. I mean the urban areas. Then there is a demand for housing loan requirement. So if you really look at it, new requirement is 1 million. So 5 million to 6 million from 2015 to 2017, there's a 100,000 unit per annum fill the housing gap. So there is an opportunity for us to give more loans to the housing sector if we look at it from the urbanization um, point of view, right? So, so that is why we have a condominium market is growing because of there's a huge demand for them, right? And also the growth in tourism also we noted that little bit of increase, right? Because of the tourism, they may not go in for hotels, they may go in for this condominium. It will come one day, the people can sell the houses against the hotels, right? And and if you really look at it, the tenant profiles, so is 19% local users. Now, if you really look at it, 67 are foreign professionals are using tenants. So that means there's a huge potential. Now, for an example, when this city, I mean Colombo city comes up, then a lot of business opportunity, business places are going to be there, and then those people who are working there may look at it for residence. So that is why the condominiums are have a big opportunity. That is the expectation of they are just building, even though at the moment there is some um, less demand in that. But if you really look at it, another aspect of the Sri Lankan establishment, right? So we are in the 91.8% establishments are is from micro level, right, on the small medium. That is why a lot of organization we need to concentrate on micro sector. We must consider on giving loans to the micro sector, because that is a major part contributing from the employment as well from the micro center. Now, if you really look at the labor force also, there's a skewed to the informal sector than a normal sector, right? So SME, so we know, everybody's know what is the definition of SME, and then there's a huge potential. Still, I don't think nobody has still fulfilled their um, full requirement. 200 million micro, small and medium enterprises have no access to the credit. Still, we have a 200 million. I told you last time there are 350 million women are there's a credit gap. Still, they are going for informal um, businesses, in lenders. Right now, if you really look at in Sri Lankan situation, so I don't know whether you are this is trust information. We have around 230,000 employees or business owners, which is about 2.8% of the total working population, right? So while 75% of them are local Sri Lankan entrepreneurs are categorized as SME. So we have a large segment of SME. So if you are compared with Asian countries like Thailand and Vietnam, so we are very much less. Now you see, from the working population in Vietnam, 19.6 are SME, but in Sri Lanka, how much is 2.8%? And in Thailand, 27.5% is more working population. Sri Lanka again 2.8%. So there's ample opportunity for us to look at the SME sector. Now, if you even for countries like Bangladesh and China, you see 11.6 and 7.5 are more than Sri Lanka. That Sri Lanka is 2.8. Now, see, so even for countries like similar to Sri Lanka, also they are managing 10%. That means the SME sector is growing, right? So therefore, so Sri Lanka is far behind in that aspect. So if we need to compete with the global economy, we need to improve this section. So there's an ample opportunity in the SME sector. That's what I want to highlight. There's opportunity for credit business if you're really going to analyze. And also, in the labor market also now rapidly changing. Now we are in the fourth generation industrial revolution. So we are creating more innovative and technology-based jobs. Now, one fact is outsourcing model. Now, traditional employee-employee relationship is slowly disappearing. Now, people are talking about gig economy. You know what you mean by gig economy? So, broadly refers to an economy where freelancers or independent contractors widely exist in the labor market. So, we had a good experience because of this COVID-19. So, we also move little bit into the gig economy in the future. So, there's a uh, shifting of economy or the labor force also changing. So these are some of the factors we need to look at it under socio-cultural economic factors. That means we have a market opportunity, a credit market opportunity for that sector, right? So we can't say it's saturated. No, there's a ample opportunity, right? So can you remember we discussed 18 billion loan has given by the informal micro finance sectors, and they are of course the interest charge maybe you're supposed to give 33%, 35, but they are giving 50, 60%. So we will discuss all this in little later on further, right? Now we're moving to, so we just discussed about these points, and now we are going to discuss basically the most important thing is the legal factors. That's the important thing as per the credit businesses, right? Okay, now let's look at it. How legal factors impact my credit business. That's the important area everybody need to know, because it's become a top challenge today to compliance with uh, all these regulatory requirements, right? And that's a major task to be faced by the banks, right? Meeting all these legal requirements, right? Okay, so bank, the main act is the Banking Act, is 30 of 1988, and they were intended to change the entire Banking Act during 2021. So they are going to eliminate non-bank supervision departments. So one department will look after finance companies and as well as banks. So there are a lot of things they are going to change. A lot of things to the new act, right? Right. Let's look at it now. Why we need the regulations? So many reasons we need to have regulation. One is to protect consumers, right? One factor why we need to protect consumers when you're granting loans, right? For an example, I'll tell you. Sometimes we are advertising floating rate interest rate. Yes, good for us at that time, at the good time. If the interest is fluctuating, always better to set your interest rate on floating rate. But at the low interest rate regime, so we will give the low interest rate, and the customers, feeling that this the interest rate is going to pay for entire tenant. But then if the market interest rate increase, then definitely because of the fluctuation interest rate, then he had to pay more. So people not understood all these things, right? So we need to, laws are there to protect consumers and also to maintain soundness of financial institutions. People may take loans from the bank and they not pay you. So how to get rid of them? So we will discuss little later on that. And also to maintain stability of the systems. That's also an important thing, because we discuss the system, financial system is the backbone of any country's economy, and to reduce or avoid the criminal activity concerning money. I will tell you that story a little later on, right? Okay, now let's look at it. Some of the challenges because of the regulation we are going to face. So banks need to have maintain IFRS 9, and then new taxes, then the Basel III come up with the capital adequacy ratio increase. Of course, now under new, there will be a lot of concessions given by the regulator, but we will discuss on the post-COVID. But in 2020, we supposed to face all these problems, right? Then new capital adequacy ratio of 12.5, and then liquidity coverage ratio is up to 100%. Net stable funding rate, that's also recovery ratio is also 100%, that you need to have more cash with you. The more keeping your more cash mean you don't have much money to lend. That's the issue, all these laws, right? And so CBSL adapted several policy measures to bring down the cost of funds of the bank before this COVID, right? Remember that, not not because of the COVID, right? So before COVID-19, these are pre-COVIDs. So Sri Lankan central bank has reduced their policy interest rate, that is DR and LFR lending rates, and also reduce the statutory reserve ratios. Now, in 2019, they have reduced 100 basic points, May and August 2019. And what is the aim? To lower in the market lending rates. So we discussed last year, the credit is not moved, is around 408 billion total credit granted to the private sector. So it's not enough. So one of the factor we have identified last time, because of high interest rate, because of high deposit rates, and because of the high interest rate. So thereby they reduce their policy rates by 100 points, and to expecting the banks to reduce their lending rate. and thereby boosting the credit flow. But again, in 2020 January, they reduced another 50 basis point, and also SRR also to reduce to 5%. So through that, but they're expecting to create a liquidity situation in the market, and to people, banks have more money to give loans, right? And can you remember we had a fixed deposit rates somewhere in June, and they have the central bank has decided to have a cap on the deposit rate, and according to reduce the interest rate, lending rates. But that's not happened. Then what happened? What central bank imposed ceiling on market lending rates in September 2019. They have taken out the deposit rate ceilings, right? And also they took some initiative to cap the 28% the credit card advances, and to charge for TODs to be not be more than 24%, and also penal interest rate also required to be not more than 4% per annum. So these are some of the um, regulatory actions taken by the regulators in 2019 in order to boost the credit growth, right? So despite the fact of all these things, I don't know whether the credit is improved or not. But if you really look at it from the, even though the central bank has taken away from this fixed deposit rate, but as far as the finance companies are concerned, they still manage their fixed interest rate for deposit as well as fixed interest rate for their lending. So that is how they control the finance sector, right? So they are given maximum after 5 years they can charge TB plus 4.25 as credit, right? These are charges. Okay, so are you aware then from SLIBOR, so Sri Lanka Interbank Offer Rate, from July 1st, 2020 onwards, central bank has taken step to not to declare SLIBOR rates, because they thought nobody is using these SLIBOR rates, right? Because instead of that, a lot of banks are using policy rates, average weighted call money rate, average weighted prime lending rate, LIBOR rate, or treasury bill lead, right? So therefore, no point of central bank to issue SLIBOR rates. So therefore, from July 1st, 2020 onwards, for when you're thinking about deciding the interest rates, so SLIBOR rates are normal, yeah, right? That's a decision taken by the central bank from July. This, and also bank also to submit recovery plans, right? You noted the, so central bank has instructed all the banks to come up with some recovery plans, right? And I think the government or central bank recently, maybe last Thursday or Friday, they also requested the actions, the loans, and given to people, and action plans and things like that. They asked for a quick report from the banks, right? And then so there's a meeting minimum capital requirements, right? So in Sri Lanka, so from 2000 December onwards, they're requesting to improve their capital requirement. So even though now in 2020, this year they have postponed, but before that they have decided to improve their minimum capital requirements, right? From 20 like that. Okay, and then we look at it to introductions of SLFRS 9. So regards, I think you have learned in all these things in some other sessions and financial management in the same subject. SLFRS 9 requires bank to provide for loan losses under expected credit loss method. So that means you have to avoid more provisions, right? So then if you add more provisions, what happens? You don't have money for loans. But that also they have just for the time being they have taken out to as a solution to the new this problem. So then because of this SLFRS new regulation, so your provision may be 30 to 40%, right? And then thereby you are not having enough adequate loan amount to grant. Right, and then and also central bank also look at it. They introduce a new concept called domestic systematically important bank. Now, as we are aware, from 2019 ends or 2021 20 from Jan. So we have banks to maintain certain capital adequacy requirements for 12.5 and to 14. So what they look at it, they need some sort of a buffer, right? So if any bad situations comes like this, the significantly important banks now, banks, big banks, Sri Lankan banking structure is what you call oligopolistic, no? So what you mean by oligopolistic economy mean basically a few larger players with a large number of small players. That is how Sri Lankan banks, we have around 5, 6 large banks where the asset base is more than 70% of the total asset base of controlled by the 5, 6 banks in Sri Lanka. But we have around 20 odd small banks, right? If something happened to the one large bank, there may be having a contingent effect, right? So therefore, in order to prevent that, they have come up with new requirement, right? New requirement to have some buffer for those domestically systemically important bank. Based on that, so they introduce new bucket systems, like now the based on their uh, criteria, they categorize Sri Lankan banks into 3 buckets, like bucket 1, 2, 3. So to have a high loss absorption, that is HLA requirement, say as a percentage of rated weighted average asset base, right? So now, if you really look at it, this important thing is a good thing, but in to that categorize Sri Lankan banks, especially the Bank of Ceylon and Commercial Bank of Sri Lanka is categorized under bucket number 2. So they need to maintain 1.5. That means 12.5 plus 1.5, 14%. And the People's Bank and Hatton National Banks, the second bucket 1. So in apart from 12.5, they need to put another 1%, that is 13.5. So all other banks are need to maintain capital adequacy ratio of 12.5. That is a new requirement of capital, right? And this is how it works, right? Um, Now it's 12.5 for all other banks. Now earlier is about 500 million asset base like that. That's no more there. They have changed the entire systems. Now they are categorized banks into 2, right? Like this. Um, uh, so systematically important bank need to have a separate adequacy, right? Uh, okay, that's the important thing. The second important thing is a product execution. That's the area we need to look at it. Now, you know what is product execution. That was a 4 of 1990. This is, I'm referring only the laws prevailing to pertaining to the credit business. At number 4 of 1990, so we know it's dealt with parate. Parate means is the Latin Dutch word is called immediate sale. The parate mean is that. So that's a special facility given to banks to protect the uh, protect the financial institution from customers, right? Like customers need to protect from banks, and also banks also need to protect from customers. People who have to take a loan as not pay or paying little delayed. Those are credit risk customers. So this act has given us more power, right? But in 2011, so what happened? So earlier in 1990 up to 2011, the limit is any amount we can execute the parat. So after 1 of 2011, and that was restricted to parate rights to, as everybody knows, to 5 million. So some people are, purposely taking loan worth of 4.5 million in order to prevent the parate execution. So we as bankers need to understand to give them a 5 million, right? Because why they are taking 4.5 just to get rid of this parate, right? So 5 million. And then another amendment came for the same law, Act number 19 of 2011, and that is they're talking about principal amount borrowed. The principal amount borrowed mean not with interest, the principal amount borrowed, the new clarifications, right? In 2005 to 2005, right? So we can sue the borrower, not only the borrower, the also um, the guarantor. So right after the case of Ramachandran versus HNB, that was given decision by the Supreme Court not to you can't under parati you cannot execute for guarantor. So that's the decision. And then further decisions given again the HNB versus Jayawardena because of if you are a director, you can execute the parati for guarantor. So that is not the case. Now the recent case is this, right? So the recent case is it's not as recent, it's 2017. It's called Sumutu Jaya Sanjeevani Nanakar versus HNB. Now all banks have some problem with this decision. Sumutu Jaya Sanjeevani Nanakar versus HNB. Now what these three bench, Cicera Abru and three judges, they are given a different opinion about the parati. Now what they are telling, they are just identifies principal amount. Right now, a lot of issues are there now. Banks are facing about mortgage, about executing parati. Right now, but the argument these judges are giving, suppose the person have taken a loan for 10 million, right? He has continuously paying, right? He is continuously paying, and his pain and pain now his outstanding comes to 4 million. Say from he have taken 10 million worth of loan, now he has paid, the amount is come to 4 million, right? And after the 4 million, he has some problem. Now he cannot settle their dues. So we will execute parati. Why? The principal amount is 10 million. But the guy who took 4.4 million, say for an example, right? He has not paid any cents. Total amount is outstanding because we have taken only 4 million, but we can't execute the law. So what judges are telling is rather unfair to guy who took 10 million and paid up to 4 million. The balance is 4 now. The guy who has taken 4.5, now balance is still 4.5, but we can't execute the parati. So the guy who's paying, we are penalizing. The guy who is not paying, we are not penalizing. That's the rationale from this case. So therefore, we have a problem. What we said is we're saying is he considered the principal amount. Now that is the word he called principal amount. Refer 5 million is now questionable. Now what is it? Principal amount mean less than 5 million, right? So therefore the decision is given against the Supreme Court has given. You can't have injustice injunction a guy who paid 4 million under parati. So therefore a lot of cases are now pending. Banks have a little problem about executing parati. The one is Sumudu Sanjeevani Nanakar versus HNB. So all lawyers may, once you put and file action under parati, they will go with quoting this case. So we have an issue on this, right? So that's an issue now we are facing with as far as the credit business is concerned, especially the credits given under mortgage because of this Sumudu Sanjeevani Nanakar versus HNB case. A lot of problems to banks, right? I hope you understood that. I think you will learn somewhere else. Okay, so then the next one is the most important thing, as I told you. So we cannot use banking sector for criminal works and for money laundering things, right? So it is our duty to stop this money laundering taking place through the banking system. Now, there is some. I was in I went to for official matter for USA for some matter. Then there's a discussion. There are a lot of money come to Sri Lanka for real estate sector, for these condominiums and things. All are coming from money laundering, right? So that is what their views, right? So that is why so they have uh, put some um, condition to Sri Lanka, right? So in money laundering in the world, is around 2.5% of the GDP. So it's a huge amount. So money laundering is taking place is something around 3.8 trillion. So now it's around 4 trillion or globally happening through the money laundering. Now, as a result, how is Sri Lanka is faring? Can you remember? Sri Lanka was listed as the grey listed in October 2017 and FATF. And so we have regard to implement a time-bound action plan come out from this list. And based on the FATF listing, the European Union or Parliament also blacklisted Sri Lanka from February 2018. So, we had a bad time as far as a lot of LC open. We have a corresponding banking issues. We have to put some money as insurance and things like that. That is why it's impact the credit business. Now, we are fortunate enough. So Sri Lanka Central Bank has initiated the action plan, and the Financial Action Task Force delisted Sri Lanka from the grey list in October 2019. So that's a very good sign, and recognizing significant progress made by the banking sector in Sri Lanka, right? But still, if you really look at the annual report, is suspicious transaction reported to the central bank is increased from 1,000 odd to 2,000 odds. So it's increasing, but we have taken proper actions to strengthen our rules and regulation as far as this area is concerned. And also is a very good sign. European Commission also delisted Sri Lanka from its blacklist of high risk country from 7th May. That is very recently. So 7th May 2020. So we have basically, therefore, we are lucky to get rid of from all these issues we face, because all these factors are contributing to our LC opening with dealing with corresponding banking, right? So we have to charge high rates for that because of this. Now we are basically okay from this, right? And also, and you noted that another important things, Sri Lankan central bank is look at it, regulating the informal money lending business. Now, I told you the formal money lenders are banks, financial institutions like that. There are a lot of informal money lenders in Sri Lanka. As I told you earlier, there's around 18 billion was given under the informal money lending area. So why we need to regulate? Uh, we have a act called Money Lending Ordinance 2 of 1918, right? But it's not provide protection for customers, right? Its law is there, but it's not have enough support. So it's not having the licensing or registration proper methods requirement for money lenders. So in that aspect, central banks is look at it to introduce a new law for informal money lending business. Now, why we need to regulate this informal money lending business? A lot of because of the various reasons. Uh, One factor is customers of such lenders are often subject to unfair terms and conditions. Yeah, Sri Lankan, I told you there's a huge gap in Sri Lankan SME and others microfinance sector. All ladies are go and take for high interest rate. So that that sector is because of them. they lost the confidence, trust and confidence um, uh, from the the formal sector as well. So therefore, so they are not also reporting. So informal sector, they are not reporting to the crib or for their information, right? So therefore, we need to look at it a better credit business. So we need to report all these details. So informal sector, a huge portion is represented, but it's not reported, right? And also because of this competition, the severe competition in the form we are facing, because maybe due to informal money lenders, because they are practicing unethical things to and harassing the customer to recover, right? So therefore they give a lot of loan, but not giving and taking also high interest rate, right? And also because of them, maybe regulator, as a regulator, they're not in a position to come up with good credit policies, right, for small and medium scale enterprises, because of them, right? Now, and over indebtedness of customers, lack of reporting credit information, uh, it can lead for socio-economic cost as well. So therefore it is important to uh, come up with the new regulations. Now, in that case, people are thinking our 6 of 2016 Microfinance Acts not enough. Yes, it is not fully covered all the aspects. Therefore, central bank is look at it to implement a separate authority called Microfinance Credit Regulatory Authority, and also to be to monitor and regulate microfinance business in Sri Lanka. Right? I think so. The latter part, maybe early part of next year, there may be a revisions of, or maybe repeal or replace, maybe the present Microfinance Act. They come up with a new act. Okay, so then, so we, as everybody knows about the customer charter, so central bank introduced customer charter to protect the customers, right, as well as to protect banks as well. So they recently introduced this customer charter, some sort of a customer charter, the finance companies as well, right? Thereby to maintain the relationship and maintain the trust and confidence about their customers towards the financial institution by introducing customer charters. Now, customer charter is the things you don't want to. Everybody must be knowing the two documents you need to sign at your appointment. One is secrecy, other one is customer charter. According to customer charter, every employee in the organization, in the financial organization, need to sign customer charter as well as the confidentiality. And that's the initiative taken by the GAVA regulator from the customers protection point of view. And also you look at it, the financial ombudsman. Now, the financial ombudsman is basically for resolving your customers' credit problems. Like I told you about credit counseling center. Is there to safeguard the people who obtain a credit, and they give you guidelines how to uh, pay your credits and some management of their credit. And if you really look at it from the financial ombudsman side, point of view, so if you look at it from financial year from the left hand side in your screen, and then go from 2019, so complaint received by the financial ombudsman from this 4 years time period, it's increased from 714 to 1164. So some of the complaints resolved by ombudsman uh, is 707, but there are some still to be resolved. And out of 1164, and we have noted that majority of complaints are received by the ombudsman from leasing sector. That is what he pointed out. So So there are some issues, either giving loan for wrong person, or maybe collecting using harassing systems or something like that. So, so what are the reasons have given for all these issues? One factor is the business targets. We as banks, we are giving a lot of targets and things to our credit people. So based on that, they are maybe using unethical things, and also maybe due to uneducated training. Mean you don't know how to identify good credit customer. You don't know credit worthiness, how to identify, to evaluate the customer, and how to evaluate the application and things like that. And then it's absence of directions and guidelines by your own organizations maybe, and not explaining the terms and conditions to customers, offered to the customer. That is why, as I told you in the very beginning, the issue of floating interest rate versus fixed interest rate, right? People not understood. They go for floating, and then suddenly the interest rate goes up, and then they complain, right? So we are not going to explain all these things to the customer. So that is why all these complaints has increased, right? And these are some of the reasons given by the ombudsman why the credit complaints are coming. Basically, for more complaints are for credit operations, right? So that is not good thing also. So what do you mean by a CRIP also? What is CRIP, and CRIP also is a body who is established for performing creating a conducive environment for people to obtain credit, right? It's a facilitator and also is a catalyst, and also so his duty to distribute the credit to all the sectors of the economy, right, and to encourage responsibility of people to become credit worthy. These are the three main objective of a CRIP, right? Now, if you really look at it from 2019, uh, inform 19 figures, Credit Information Bureau has given 10.1 million credit reports to industry. So that's a huge amount. That's a very encouraging information. Thereby, we can really identify the customers and improve our credit quality by having institutions like this. And customers also obtained the I reports in 2019 for various reasons, right? And that shows their credit worthiness, and repayment capabilities and things like that. An important thing is in 2019, and CRIP initiated the implementation of Net Credit Bureau system, and that is a strategic initiative taken by the CRIB for introducing a new credit scoring system. So I think we are all having, our individual banks are having credit scoring system, but then CRIB also can have a credit scoring systems based on their uh, information what they are getting from the banks, right? And CRIB was expecting to go live with the new system by late 2020. I don't know now we can do it, but it's something like it is equal to the World Doing Business Index, right? They have taken all these criteria into account when you are developing this a new credit evaluation system. So in that case, CRIB as our catalyst or supportive or facilitating organizations for credit also come up with lot of new initiative things to support our credit business, right? So we can get maximum from them as well, right? Okay, so credit CRIP score, and they are going to implement in 2019. They introduce the CRIP score in till such time they come up with that fully system, right? Okay, and then so those are things what you need to look at it from the legal environment's point of view, right? We need to look at it all these things from legal environment point of view. And I think so you may think in certain things how it impact the credit. Yes, some of the areas which I've taken from these credits which are in line with the credit business, right? Okay, so let's look at it now. We discuss about all these points, and we discuss economy, socio-cultural, legal to credit business. And now we are going to look at it how these ecological factors look. We need to look at it to credit business, right? Impact of environment factors on credit risk bank. Now, uh, so people have considered, the planet as a bundle of raw materials. Uh, can be used by the current generation. Um, and so we need to be very careful of natural environment when you look at it, evaluations of your credits business. Right now, one important factor is major issues for facing bankers are now uh, where so the growing industrial wastage, discharge of effluent and emissions of fumes and acid rain, all of which have to be taken seriously by the manufacturers. Now that is we have seen when we had the lockdown. So how Goldface Green has come up, how the all the areas in Colombo are flushes with greens, right? So we can think how to what extent we are damaging the environment, right? So people having we have experienced a lot of disasters, right? Now, for example, some disasters which was happened worldwide couple of years ago, and a lot of issues because of uh, disasters. The present one is basically everybody is experiencing in Kuwait, right? Okay, so as commercial banks and financial institutions, fund providers for firms are forced to consider so more seriously the risk which can result of failure of repaying loans due to the rising cost of complying with environmental protection policies, right? Um, so legal risk of compensation for damages claimed by third parties, as well as the reputational risk of losing market share to non-compliance with environment requirements, right? So it is noted that a lot of banks need to compensate because if you are not properly grant the loans without taking into account the environmental risk. Right now, most leading international banks are now have incorporated environmental risks into their risk management system. Right now, we look at it credit worthiness and things like that, market risk, credit risks and things like that. Now, a lot of international banks, when they are granting credit, they incorporated environmental risk factors into their risk management system, right? And so people today are talking about green finance, right? So for that, so we need to do a uh, do some stress testing, right? So impact of environment factors. It is important for commercial bank for following four reasons. What are the reasons? Right? Stress testing can help to precisely estimate and quantify the impact of extreme environment factors on a bank's credit risk. Right? Because how the credit risk impacted the environmental factors. Then second, could be included in the customer credit rating system also. So if you are developing a credit rating system, so you need to incorporate the environmental risk factors, right? And thereby you can price in the credit products, right? If your environmental risk is high, you can price in your credit products accordingly. Thirdly, um, and you may look at it structures. Now you can adjust your credit structure based on these factors, right? Loans and investment portfolio adjustment to the credit and investment structure can we do because of take into account the environmental factors. And also the stress testing could be taken as a reference point for banks and regulators in their future consideration of environmental factors. So that is why we need to pay more attention. We all banks need to conduct a stress testing when you're granting loan for environmental risk. So now we need to pay more attention. Why, if are not considered, so it is very difficult to recover the loans, and assets value may be also depreciated, and also bank may be held responsible for any cleanup cost. Now, this is a classic case in 1990, United States versus Fleet Factors Corporation. Now, what happened there? So this bank has given um, loans to a customer, which basically damage the environment. So banks has to pay to clean cost. That means responsible to bring him to the normalcy, because of you have given the loan to the customer without evaluating the environmental impact. So they have to take the entire responsibility. They are not losing the job, losing the loan amount, but also extra cost to clean the uh, society, right? So what are the steps you can think about green issues? Mm, so you can carry out green audits. Now we call them as a green audits, right? So audit people can carry out green audits, ensure the insurance is placed, and develop a green action plans and things like that. Okay, so that is why now today environment factors, also ecological factors, we need to look at it when you're granting loan. Otherwise, it have a bad image on your business. Right. So, and also there's an opportunity because of a lot of tourists are concentrating on environmental friendly hotels and things like this. And this is how Costa Rica uh, country is developed ecotourism. So the banks in that country has given a lot of loans to people who are look at it ecotourism, right? And just give you some food for thought, right? Okay, so we discuss uh, how impact the uh, how impact the uh, ecological system, right? Uh, for your credit business, right? And now we look at it. We have learned all these things. Now we are going to look at it. How ethical factors impact your credit business, right? Let's look at it. What is ethical? Ethics mean ethics are moral principle, define right or wrong behavior, right? That's what we are talking about in ethics. Um, so let's look at it. Ethics in banking for is a global phenomenon, as you know, and ethics. The words meaning is from Greek words ethos, is a character of a person expressed as right or wrong, right? Conducting or an action. So let's look at it, some unethical issues we are facing as banks. Typical issues in business ethics and grants. Now, what is creative accounting? Now, what is creative accounting mean? So, creative accounting mean you show inflated profits figures in your account statement. Why it is important? Because where you are basically granting loans, we call for a last 3 years P&L statement, balance sheets, financial reports, and things like that. So there are the person who has want to get a loan, he have some creative account. It's unethical and it is illegal. It's a financial fraud. Remember, creative accounting is a financial fraud, right? So you need to look at it all these aspects. Then misleading advertising. So as I told you, issue with loans under some banks are giving, okay, we are giving 3 year fix, 3 floating, or they after fixed. So sometimes some people first 5 years is fixed, and then after floating. So general public not understand all these things. So then so we need to clearly give information to customers what do you mean by a trade, what do you mean by a um, floating interest rate and fixed interest rate. And mis-selling also ethical issues, because of you are as credit managers, as credit people, you are given targets, or sometimes you are based on commissions. You try to sell the credit products, to obtain more aggressively without disclosing all the material facts. So there may be unethical businesses taking place because of this. So then the conflict of interest. So that's the important thing we have experienced. We have seen a couple of months back. Uh, there is a rules and regulations given by the central bank under corporate governance when you're issuing loans to your related parties, or what you call the related party transaction, for especially for directors. You know the procedure, right? When you want to issue a loans to a director, he may not participate in that board decision, and he has to give the full information to the board of directors. It has to be approved by two-third majority, and you need to get adequate collateral to sufficiently cover your loan, and it has to be sent to the monetary board for approval, and then monetary board approval. You must have the normal interest rate where you are charging with others. So, but still, despite all these rules and regulation imposed by the regulators, there may be instances that we reported a couple of months ago. Some directors have taken loans with some favored treatments. So there may be a conflict of interest, right? As far as the credits are concerned, right? Uh, and data protections and privacy, and the very famous case about you will recall that case called Gamini Fonseca versus People's Bank. That is a data protection thing. Uh, some the story about the Gamini Fonseca case, and Gamini Fonseca is a former deputy speaker and the famous actor, and he has taken loan from People's Bank to build a uh, hotel in Diploma area, and so the all the informations pertaining to the loan taken by Shigamini Fonseca was disclosed in the newspaper by the Victor Ivan Ravia paper, where during that time Shigamini Fonseca was a deputy speaker, and they carried out a big article, big caption called "Deputy Speaker is not paid the People's Bank loans." So he filed actions against the People's Bank, Gamini Fonseca's lawyers. Now, what they put under what case they put it under secrecy. So give all the information to the third party. Now the manager is not the person who has given, but the guy who is working there under the Samaharama branch. And then what happened then? The Samaharama branch manager, because of this problem, right? Then the bank, People's Bank head office send a letter to Bank of People's Bank to Samaharama manager, because you have signed secrecy, so you have to pay the damage to the Gamini Fonseca. Then poor managers died, and then People's Bank, once you dead and gone, so no law. Then People's Bank sent a letter to Gamini Fonseca, so saying that so he has already dead and gone, so we have no liable. So then again, Gamini Fonseca's lawyer said, no, still you have a vicarious liability because he is an employee of you. You have to pay my compensation. So ultimately, later on, and this will come to some settlement. Right, that is the importance of data protections, right? You are not supposed to disclose any informations for credits to third party unless otherwise there's a way of doing things. Okay, and then political contribution to gain influence. Some of us Some of our people may give some loans to the political guys, despite the PEP. We are not supposed to give loans, but uh, due to get in order to get the personal influence, we may grant loans to by pushing my subordinates without signing by the top. Okay, there may be some legal loopholes and some negotiation techniques. All are creating to some unethical businesses practices, right? And sometimes bribery and sometimes insider dealings are taking place. All will carry on your credit business, right? Ethical factors, right? Having understood that, now we are moving to the most important part is the technological part, right? The technological factors, how technological factors impact your credit business, right? That is a talk of the day, right? A lot of technological things are taking place. So new market technological developments, right? For digitalizations, emergence of fintechs and cloud computing, blockchains. A lot of things are now coming, which facilitate us. Now, let's look at it, some of the things, right? And digital finance in the developing world, have a great impact. And there may be a 3.7 trillion, 6% of GDP growth by 2025 because of the technology. And there may be a 95 million new jobs also coming because of the technology. So that is what they forecasted, right? But in the meantime, the central bank also uh, to central bank also announced the year 2020 as the year of digital transition, right? So they want to come up with a less cash society, right? Uh, cash, more cash mean no data. So the less cash mean more data available, right? Remember that. Okay, so that's the important. Sri Lanka Central Bank of Sri Lanka named this year as year of digital transactions. They have come up with a lot of innovative things like introducing a lot of platforms, lot of shared KYC through blockchains. Now, suppose one important thing is every banks are keeping KYCs from individual person rather than keeping all information by the individual banks. You may have a shared KYC. So blockchains, they are trying to do that. So then anybody can take out the KYC forms, and then no need of keeping all the information by individual banks. So a lot of initiative was taken by the central bank for improve their credit business in Sri Lanka, right? But come up with as a payment settlement initiatives, right? And also, Lakaki also introduced just pay for new method of paying their monies, and then they are going to come up with something called proximity based services. That means in the future they are going to put if you have a smartphone, when they are going along with respective close branch, so you get immediately get a calls to you. So X Bank is now offering uh, you know uh, special rates for deposits or special rate for lending products and things like that. So if you have a if you want to go inside, and you can go inside and uh, take that facility, something like that, right? That is what we call proximity based services. So that is Lanka Clear is going to implement very soon. And there's a gadget fixed outside your branch. The people who are going along by the side of the road in your smartphone will activate it. Your offers, right? Your offers for credit offers or other services, and that's a good initiatives. Luckily, are going to come up with latter part of year to support the technology. Right. And also, they come up with a lot of initiatives from the central bank, a lot of marketing campaigns. They call cash wade, pain wade, queen wade, right? Things like that. So you can go on digital. These are some of the initiatives or some of the press advertisement carried by this central banks at a new technology. Right. So, and also we know that in Sri Lanka, we have uh, around 149% of populations are using some sort of a mobile, and out of that, uh, we have 47 penetrations in internet, and out of that 6.4 million penetration using social media. So if you want to communicate with our customers, with our loan products and services, you can use the social media as a way of communicating rather than spending a lot of money through external high spend TV and things like that. So the technology can be used for reducing your transaction cost, right? With the communication, through communication to real target group uh, by using the new technology, right? There's an ample opportunity for you to market your credit products through using the novel technology. Right. Now, these are the things what we have learned uh, during the uh, pre-COVID 2009. Just to sum up uh, what we have learned from that pre-COVID factors. First, we discuss about the present Sri Lankan economy, right? Last week we discussed on that, how the country's GDP impact the uh, credit business and how world impacted the credit business and what was happened in 2019 uh, and the restrictions to the imports. We lost LC opening to some extent, and we had some uh, issues pertaining to rules and regulation in 2019, and it's all boils down to the low credit growth in Sri Lanka. Right now, let me start with discussing the most important thing is impact of post COVID-19 on pestle factors with respect to credit business. Now, that is the most important things we need to understand. What is the impact of post COVID-19 on pestle factors with respect to credit businesses and how it impact the credit business in Sri Lanka. Now, explaining the disturbances, if the delights is they identify four potential avenues business impact. One is supply chains and market disruptions, impacts on markets, psychology, direct impacts on production, everything is impacted. Now, as a result, now to date, the pandemic has left an unprecedented trail of both humanitarian and economic damage in all countries. Right? That's you need to understand. And some people are everybody's talking about this is worse than world recession. It took place in 1930s, and it was estimated that the financial crisis which took place in 2007 and 2008 is lost around 22 trillion, 22 trillion US dollars, right? But some are forecasting, and this epidemic, this pandemic, COVID-19 is almost more than that, 3-4 times more than that, right? It's a huge loss. And every country, every management has taken some actions to control this impact. And this, but however, this downturn in economy activity, and why we are worried, because it has threatened credit growth and credit quality, right? That is why we are worried about, yeah, business point of view. Then is our credit business. Okay. Now, what are the key risks for Sri Lanka after post COVID-19 economy? Sri Lanka and the world. We need to look at it. What Sri Lankan economy going to be? So we have discussed before 2019 up to March. What is the Sri Lankan economy? Now, what be Sri Lankan economy going to be in rest of the period? How it impact exports, tourism, the remittances, right? And how it impact the external debt and all sort of things, right? So then we look at it, uh, Sri Lankan economy post COVID-19. So you know that SDFR, the Sri Lankan standard deposit facility rate is from 5.5, right? It has come down. Policy rate has come down. We will discuss the importance of these factors in to the banks in later on, and it is estimated that our overall fiscal deficit being going to be increase from targeted 8.9 to 10.7, the huge amount, right? So then debt to GDP ratio is at the moment is 86.8%, can go up to 93% of GDP, right? So that's not a good thing also, right? So overall surplus deficit in BOP, we discussed last time, we had a slightly positive overall surplus, right? And what is the gross financial official reserves? So we had 7.6, right? 7.6, and it can be now estimated to going to something around 5.5 to 6% billion in end of the year, right? So Morgan Stanley predicts it's going to be 4.4 US dollars rate. So that is why, if you really look at it today, our president also requesting, if you want to boost our economy, to consider more concessions to our international investments and loans, right? Right. This is snapshot of Sri Lankan economy is going to be in the post-COVID. And also the total assets also we may have a little increase, and inflation's okay for 5 to 6%. They are target, look at it. And economic growth, the most important things we discussed in the very beginning. We had 84 billion economy, and we had targeted 3% last time, 3.1%, but they end up with 2.3%. And this year we have targeted 3.5 to 4%. But now the central bank has targeted GDP to 1.5%, whereas the Bloomberg is target was given 0.5%. And we see whether we can go for 90 billion economy, right? And so how we recover, whether V shape or U shape or W or L shape, their economy recovery. What is V shape mean? Go down and come quickly. U mean slightly go down and coming up. W mean go down, go up, down like this, or L shape, down and stay for a longer time. So in economics, we discuss about different type of economic growth, right? So whatever whatever shape we need to come off from the downstream, right? Okay, so if you look at it, the global growth expectation, right? Now, global economy growth projected to contract by -3%, right? So that is also the global also not doing well. Now it is estimated that G20 countries, their growth rate is around 0.5% annual growth rate. Then US, they have identified their growth rate is GDP is 0.2%. China, 3.3. At one time they had around 7-8%, but China is now for 3.3. India for 2.5%. So these are other countries what they're expecting. And World Trade Organization also forecasts merchandise trade can decline much as 32% in 2020. But all these, but all these informations uh, given to us is not a good picture, right? Uh, in the world sectors concerned. Now, if you really look at, some have predicted that what happened to global, if you not take some actions, right, with policy measures. So how global next 3 months a billion percentage drop is around huge amount for Asia. We look at it from uh, around billion wise to that being 2 trillion, like that is a loss to the economy. So that's the international judgment. So how economy badly impacted because of the COVID-19. Right. If you really look at it, a significant decline in merchandise export is likely, particularly Sri Lanka. Now, what are our key export nation and our key market for basically for our apparel exports? If you really look at it, 2019 is 46% for USA, where we have generated around 2.3 billion. For UK is around 14%. This is our total market for apparel business is 10%. So what is our total export market last time is around 5 point, it is around apparel exports is around 5.3 billion, right? Now tourism is 3.6 billion. This is our total income. Now 50% of our total targeted export 2020 is 10.75 billion. So 50%, close to 46% from apparel sector. That is 5.3. So we have a problem. Why all these informations? Because it impacted our business. Because banks are basically as an intermediary open LCs to get some raw materials and things like that. Accordingly, our business is going to come down, and we will discuss uh, all these things uh, in how banks impacted all these things, right? Okay, so if you really look at it, our tourist business, tourism, and export business, right? So last year, 5.3 billion we have generated or we have uh, obtained from apparel export. From tourism, is got 3.6 billion. Altogether, maybe around 9 and 8. So, so those incomes not going to get it during this time because of the COVID. COVID is not a area specific; it's for worldwide specific, right? And also another important area we need to look at it: workers' remittances, right? These are the we are Sri Lankan is a remittance economy market, no, to some extent, right? As well as What is the percentage? And World Bank has identified and forecast 19% decline in remittances to Sri Lanka. Now, in Sri Lanka, we had 6.7 billion US dollars in 2019, and it was estimated now to come down to 5.4 billion in 2020, and still further down. You know, Sri Lanka has about 1.7 migrant workers and 5 million beneficiaries of them, right? Now, why all the problems? Because how many of our banks are given loans to people who are working abroad based on their income from there, right? So that is really going to impact the banks, right? So the World Bank forecasts 19% decline in remittances. So if you really look at these informations, right, monthly remittances to Sri Lanka from 2015 to 2019, right, if you look at it from January, right, uh, 2018 is slightly increased and 2019 is also not a bad year. So average around 500 to 600. Now, if you look at it, usually we are getting high remittances during March and April, right? So we may not getting the same monthly remittances in latter part of the year. Okay, so we need to look at it that, and banks are the people who basically 81% of our business of remittances are channeled through the banks. So the fee-based income, the loans given, all we are given to, we were going to impact. Okay, so then we look at it, then how de-risking the Sri Lankan economy, right? That's the important things. De-risking the Sri Lankan economy. Right. Now, if you really look at it, Sri Lanka, similar to other countries across the globe, Sri Lanka has also utilized three types of policies to address this COVID-19. Now, all these policies, all these uh, action taken by the respective authorities or regulator or the country leaders or whoever ultimately impacted the banking business, right? So what are the policies that taken by the Sri Lanka? One is the border control and health sector policies. So that of course, you know, they have taken some initiatives. Okay, that's the one point. Second point is fiscal measures, right? That's also not much uh, with the banks. But the third policy is the monetary and financial sector measures. So these are the areas the banks going to impact, right? So we need to de-risk the economy for that. So government or Sri Lanka has taken three type of policies. Okay, border control and health sector policies, fiscal measures, and monetary policies, and monetary and financial sector measures. Okay, right? These are the three areas. Now, you see the governments in various countries injected a lot of money to the economy, right? And you see the US has put 2.3 trillion money to the economy. Canada has given 145. And yesterday we heard that the largest money injected by the uh, Japan. So how much we injected. So we said around 50 billion, but this country like us, we are not in a position to inject such a big amount because we don't have we are not a rich country, right? So governments have injected a lot of money to boost the economy, right? So then only credit also growing. Some of the actions taken by the regulators, right? So various actions taken by the regulators from the financial point of view as well as the fiscal point, right? Uh, right. Okay. Now let's look at it. What are the regulatory support and directions uh, uh, issued by the Central Bank of Sri Lanka and how it impact the credit business in Sri Lanka, right? Okay, so and there are so many things regulators has introduced, and we're going to look at it how all these factors going to impact positively and the negative the banks. So I leave it all these things. I think there are some more slides to be explained in detail. Therefore, I'm going to stop today from this point, right? And then the last Sunday, the next Saturday, uh, just 2.5 hours is okay for me. I'll just explain to you uh, what regulatory support and directions given to us by the central bank and the government to address this COVID-19 2019 with specific reference to the credit business in Sri Lanka and how it impact the Sri Lankan banks positively and negatively, right? So let me just sum up today what we have learned up to now from today 3:30 onwards, just to summarize. So we started today by discussing the social cultural factors, right? How it impact the credit business in Sri Lanka, right? So then we discussed, yeah, there are 5 generations in any workplace, and in fact, the 5 generations in the market, right? So how all things factors are impacted by credit business. When you are developing credit business, we need to understand the demographic compositions of the country, right? What are the credit products available for us to market these segments? Still, we have a good opportunity for certain credit products. Then we discuss about the real estate business. So why we look at it is real estate loan, because Sri Lankan populations are growing and we have a fast urbanization. So there's an ample opportunity for us to grant loans for housing loans, housing projects and things like that. It may be individual or maybe syndicate and things like that. And there's a huge demand in the future going to come from granting loans to housing. And we discuss about the foreign professionals after completion of Fort City, and there may be opportunity for people to give more loans. And then we discuss the importance of SME sector. Still, there's ample opportunity for us to give a loan to improve our business as well as the country's economy. And we discuss we have around 2.8% of the total working population. We have only 230,000 employers. So it's not enough. So if we want to improve from 2.8 to at least to 10 to 12%, we need to give more loan to small sector, SME sector or microfinance sector. And how can we do that? Be converting SME sector, small sector to the medium sector and to the larger sector, next sector, by granting loans. Right. And then we discuss the most important area is the legal aspect. And we discuss about why we need to have regulation. So why we reduce the policy rates during 2019 to improve the credit, reduce the lending rates. But still, despite the fact of all, so we are not in a position to achieve uh, our targeted, the country's targeted credit growth, right? And then we discuss the most important thing is the banks, the product execution. That's important things we need to look at it because of this is right. And if you want to further study the Sumudhu Sanjeevani Nanayaka HNB, the decisions given is banks are now having some sort of a problem, right? How to execute the parati. And we are fortunate enough to be moved out from the grey list and the blacklist. Thereby, we are now a little bit of facilitating, dealing with corresponding ban, opening LCs and things like that, because we have taken out from the red list, grey list and the blacklist. So then we discuss the central banks expecting regulating the informal money lending business, and that's a good initiative. Banks have a lot of problem because of that, so it may have a good conducive environment for lending. Then we discuss disputes are coming mainly from credit business, especially for leasing areas due to certain reasons. And we discuss the support of facilitating organizations like TRIP have come up with a lot of initiatives and a lot of what you call these lot of opposed to the credit business by introducing new credit scoring systems and things like that. Then we discuss how the uh, environmental factors impacted the credit business, and in order to reduce the reputation risk and the other risk, uh, we need to look at it the ecological factor when you are granting loans. And thereby we discuss it is imposed to do a stress testing impact of environmental factors, right? And then we discuss ethical factors impact the business, especially certain areas like creative accounting, misleading advertising, conflict of interest, and things like data protections and things like that. How ethical issues impacted your credit business. Right? And finally, we discuss the technological factors, how it facilitate the credit business of introducing a lot of new payment platforms. You can pay your loan settlements uh, and introducing one common KYC, and all things will facilitate our credit business. Right, and then We discussed the new communication channels of internet users and Sri Lankan mobile subscriptions and things like that. How it facilitate to communicate your lending products to targeted customers at a reduced cost. Now you see, if you advertise today for the newspaper or a TV, you're spending a lot of money. So it will contribute to your cost. So you can reduce that cost by communicating using new technologically media. Then we discuss how post COVID-19 impacted the credit business, right? And we have discussed how it impacted the credit quality, right? We look at the Sri Lankan economy from today and end of 2000, maybe post-COVID, what will going to impact my credit business? How we are going to impact my credit business? And we discuss the global also going to contract by -3%. So the countries who we are exporting apparel business, apparel merchandise also affected, especially United States, United Kingdom, most importantly Italy, right? So that business also impacted. So why, how credit impacted? Because we are getting, we are granting loans to people who are working there, migrant workers also again impacted because of that. Then the tourism business. So we have grant lot of loans to tourism business. So then they are going to be impacted, right? So banks, the people who are giving loans to tourism business, we are not in a position to recover maybe because of that, right? So how these factors, and especially for remittances, so 19% deduction expected during the year, so that also badly impacted our businesses, right? And then, so how to avoid this? How de-risking the Sri Lankan economy? What actions taken by the regulators and the authorities? How it impact the Sri Lankan banks? Positive sides and negative side. So that, of course, we are going to discuss during the last sessions, that is on next Saturday, the same time. Okay, thank you very much. So I hope you have got something. If you have any problem, as I told last time, just drop me an email or SMS. My number is not 777864202, and my personal email is jagat at jkg jagat.jkg at gmail.com. Right, I'm in a position to individually talk to you, so send an email. Thank you. So we see you on next Saturday at the same time, and there we are going to discuss de-risking the Sri Lankan economy and the impact of banks, positive side as well as the negative side. Thank you.